All right, let's dig into phase one. So phase one, this is one of three phases, and I've left these orange circles on here so it aligns with the material that you've been going through. It's interesting. Without the moving averages, it's just so interesting without them. How would you ever know by just look at the chart and the price action as to when the ideal entry would be? So a couple things in this video. We'll start with the moving averages in a second, and then I'll probably allude to the Blue Angels. There is a correlation between moving averages and the Blue Angels, believe it or not, or at least I think there is. Growing up in Seattle, going to Seafair every August, the Blue Angels were a huge part of the Seafair weekend and a huge part of my life. But I just think it's interesting, so I want to share that with you. So let's just jump in here, and I'm going to start overlaying the moving averages. But before I do, remember you want the candles or the time frame to be on the 45 minutes, and right now we're looking at Bitcoin. And then all of the moving averages are going to be set to the daily time frame. So it'll be tough to see on some of these. So like right now, I just overlaid the 2. It's a little faint. We're going to add in the 3, 4, and here is 5. I'm going to go in here and make this orange. I'm going to make it bigger. And there's 2 reasons why I did that. So the 5 EMA, I learned from Brian Shannon. He's a chartered market technician, and he's the one who really brought the anchored VWAP back on the scene. But one of his go-to moving averages is the EMA 5. So that's number 1. Number 2, on another video, when it's time to sell, there's going to be 3 or 4 different areas in terms of where we start to sell or scale out. And the 5 EMA is one of those. And that's what Brian does as well. He typically gets all out when price action falls below it. So more to come on that. And then here is the 8, the 10, and the 13. We'll just kind of let your eyes take a look at that. So even though we've got these moving averages on the chart, it's still unclear. It's getting clearer, but it's still unclear if it's safe to enter for these 2 setups that we're looking at here. But one thing I want you to just consider is see how these moving averages are so tight and they squeeze? Unlike up in this section where they start to spread apart like an accordion per se. But this, if you could cement this into your brain or tattoo this to your forehead, but this is the pattern that we want to remember. And in trading, patterns are everything. There's all different types of pattern recognition. So for example, there's 8 geometric shapes such as triangles and rectangles. There's also pattern recognition in moving averages. And this is, again, when you see the daily moving averages squeeze like this, definitely time to pay attention, but it's still a little unsettling or a little unsure. But now let's add in the daily 21 EMA as well as the 50 simple moving average. And the green, this is Stan Weinstein's, one of his go-tos. So this green is the 50 simple moving average. And just real quick on this. Ideally, what we want is the 50 SMA in an uptrend. Uptrend is subjective, but like right here what we're looking at right here, that's considered an uptrend. You can see now it gets much easier to identify if it's in an uptrend when it gets, all the way up here. And then the other thing you want to remember is so you know what, let's do this. Let me make the 21 a little more pronounced. Yeah, there we go. So here is the 50 simple moving average, and then we want the 21 EMA above the 50, check, which it is. So those are your 2 first things that you want to look for. And then you want to make sure that all of the other moving averages, when they get wound tight like this, that they're also above the 21 EMA. So check. And here's another example for the entry. All the moving averages. So the EMA 2 through 13, they're all above that. And then speaking of the 13, which is right here, this one, and then the 21 EMA, That's a common denominator across all of the legendary traders, such as Oliver Kell, Mark Minervini, as an example. They all like to use say the 11 and the 21 EMA. Some like the 10, some like the 20. They're about the same, but those are the two very extremely common moving averages that those, in my opinion, legends use. And then again, they all use the 50 SMA. All traders use this, but this is what I learned from Stan Weinstein. This is his go-to. So that, my friend, is what the ideal setup looks. And then I'll also allude a little bit in this video about selling. There's going to be a dedicated video just on scaling out or selling, but really there's going to be about 3 or 4 areas where we're going to start to sell. But when price action drops below the orange, which is the 5 EMA, like Brian Shannon, I wouldn't say we're going to necessarily abort and get 100% out, but this is where we're going to consider scaling out a little bit. And then there's another saying, so this is the 21 EMA, but there's a saying out there, not a lot of good happens when price falls below that 21 EMA. This is definitely going to be a level where we also want to scale out. But then with Stan Weinstein, and I agree with him 1,000,000%, that when price falls below the 50 SMA on the daily, you abort. It's Mayday. You sell 100% of whatever it is, the asset that you are in. So like, for example, we could have sold down here when price fell below it, but it just topped up above, back above, and that's totally okay. More to come on that too. That's very common. But when you get in these high beta, high volatility assets like crypto, you're going to see things like that. But again, when price falls below the 50 SMA, we're all out. 21 EMA, this is definitely a key level to start to sell, scale, as well as the orange, the daily 5 EMA. So again, more to come on that. So next thing I want to do is let's watch some of these kind of real time, and I will narrate. So we're going live now, and I'll just get my drawing tool. So we had a little shakeout. Notice the moving averages, how their price is below it, it shot up above it. And by the way, there's a little lag with TradingView on these daily timeframes and the smaller timeframes for the candles. So that's why it's a little laggy. The moving averages are behind it. But see how they're squeezing right here? This is ideal. This is where we're going to make a first entry. That's textbook. We need to see how price action reacts to it. And then notice the moving averages. They're all sprawling apart from one another. And they've all done this bullish crossover up through one another. And even though this is moving relatively pretty quick right now, but in real life, this would be moving extremely slow. And I'll just sit here, be a little quiet, narrate as price progresses forward. But right now, you are all good. And not only that, after this, we'll do some measured moves so we can measure, how the percent gains and the duration, how long we're in the trade. But as it's doing this, first of all, price just fell below the 5 EMA, so let's see what happens. Price reacted nicely to the 21 EMA. All looks better right now. It's getting a little volatile. But again, price is still above the 21 EMA, so all is good. Now we're coming into the second orange circle. But again, everything's fine. Depending on your trading preference, even though price fell below the 5 EMA, and if you wanted to, you could hop back in, or you could have just not sold and hold on, hodl, all is good as well. Notice the moving averages, how they're coming back together again. Get a little flush out, price drop below it, totally normal, to be expected. Yeah, look at that, how they squeezed. All the MAs did a bullish crossover to the upside. They're all above the 21 EMA, and the 21 EMA is above the 50 SMA, textbook. And now look at the direction, by the way, of the 50 SMA. You can see that the 50 SMA is definitely trending up versus more so how it's going a little bit somewhat flat-ish, but still trending up. But now it's much more pronounced. So, the trend is your friend. Excuse me. The trend is your friend when you see that. And this is what I was alluding to with the Blue Angels. They see these moving average, they're perfect in formation. By the way, when I say perfect, nothing is perfect in technical analysis, but this is about as perfect as it gets. And this is just like the Blue Angels when they're flying in unison. Yeah, let me just spend a second on this and talk a little bit more about the Blue Angels. This is what I mean. Is just imagine right here, either they're taking off, getting ready to get in flight, or they're in flight and they're getting ready to do some sort of pattern, and they're getting into their formation, and and this is their formation, right here. This could not be more ideal. So just real quick on the Blue Angels. So again, these are, when I was growing up as a kid, absolutely loved them. Every summer, every August, they'd come to Seattle. But this is what I'm talking about. These are the moving averages, this right in here. This is ideally what we're looking for, as well as right here. This reminds me of the moving averages. This is perfect. Now, if we focus on this, you can see like this particular jet right here, the moving averages are crossing down. Whoops, they're crossing down, hypothetically, if you know what I'm saying. But this is where we would want to start to pay attention, where the patterns are going to start to break down. Here's another example. It's still a good pattern, but you've got this guy who's not in alignment, and then you got this guy over here who's not in alignment. This is what I love. Just think of the Blue Angels. If we had to just focus on these two photos, right? Perfect and perfect. And this is, again, what we want the moving averages to look like. So I hope that was helpful. So let's get back to the price action and we will hit play. Again, all is good. You got the 21 EMA trending up, sections above it. One thing I want to call out too is when you start to see this gap, unlike down in here with the moving averages, nothing goes up forever. Trends always come to an end. So when you see this gap like this, that means that the trend potentially is coming or near to the end. And we'll have another video on that, but see the gap between the 21 EMA and the 50. That's also an indication of strength. And that's where a lot of traders, when they say, hey, selling into strength, this is the definition of what strength looks like. But still, everything is still looking great. No stress, no sweat. Prices above the 5 EMA, the orange one, all is good. EMAs are all above the 21. The 21 is above the 50. Now we broke down. So here is where we would probably want to consider selling. And it looks like we are now at real time, which we are at the time of recording. It's Friday, December 20th, where Bitcoin's at 95,000. But if you notice where price fell below the 21 EMA, and again, on another video, this is where we're going to want to talk about where if price falls below the orange, start scaling out, falls below 21 EMA, starts scaling out. And then as the ripcord, if you're a Blue Angel, you got coming into trouble. But according to Stan Weinstein, this is where we want to abort, 100% get out. And then if we were to sell a little bit, start to sell when price falls below that, the 5 EMA, you just sold about almost 5%, 4.93% from the top, which is awesome. And if you would have sold when price fell below the 21 EMA, that's about 9%. So again, we start to scale. But I think we're about ready to wrap this up. And so let me just say this. This is what I want you to, this right here. This is, if you could just etch this into your memory, this is a pattern. Patterns repeat and repeat. And then if we start to zoom out as the moving averages start to expand like this, not like that, when the 21 EMA right here starts to spread from the 50 simple moving average, unlike down in here, again, a lot of strength. And nothing lasts forever, especially in these high betas, high volatility assets like crypto. But this, my friend, is a deeper dive into phase one. And then once we pass the sniff test on phase one, that's when we go into phase two, and more to come on that. All right. Hope that was helpful. And that's a wrap. Thanks so much.